time when interest rates are climbing and everybody with a microphone feels the need to call for a Fed rate immediately, a hike maybe Friday after the number, you know what I mean? I would think it would be a serious mistake to raise rates. But what the heck are we supposed to do with these high-yielding bond market alternatives that go down every time we chatter about it? Consider the ultimate bond market equivalents, the utilities. This group has just gotten slammed of late, regardless of how the companies are doing. Look at Dominion Resources, letter D, one of the largest gas and electric utilities in the country. Fast-growing natural gas transmission, distribution pipeline business. Not to mention a major liquefied natural gas export terminal that should be up and running in a couple years. Which, how about an MLP they spun off, Dominion Midstream Partners? That's terrific. Dominion reported a strong quarter a month ago, delivering a 3-cent earnings beat off a 96-cent basis. Management raising its guidance for the next quarter, not cutting, putting through an 8% dividend boost. That gave you a 3.8% yield now at these levels. Yet how's the stock fared? It was trading 71 and change when it reported. It just broke below 70 to $68.43. Rising interest rates have made high-yielding dividend stocks much less attractive versus bonds. Dominion's been punished through no fault of its own. As the company's transforming itself into a much higher growth business than most utilities, that punishment could continue as long as there's rate chatter. So let's check in with Tom Farrell, the chairman, president, and CEO of Dominion Resources, find out more about where his company is headed and how it's doing. Mr. Farrell, welcome back to Mad Money.
Jim, it's great to be with you.
Tom, I got a chart I'm looking at right now. It's projected growth rates of the 25 utilities that I follow. You have a 1.7%. The peer average is 0.8. National average 1.2. You're the best, the fastest growing, and yet your stock goes down with everybody else's. What's going on?
Your introduction, I think, Jim, as it usually does, was right on the mark. It's it's a cyclical thing going on. It's a sector rotation. The fund flows into the utility sector are quite low right now. I think people are waiting out the interest rate environment. Utilities traditionally underperform going into a potential rate increase, and then they always outperform after the Fed actually does something. So I think that we're seeing a classic cyclical event with utility sector that hopefully will be over soon.
Right. Well, in the meantime, I would think for some of the projects, and I'm talking about the Atlantic Coast Pipeline and Supply Header, also, of course, Dominion Caroline Gas Transmission, but Cove Point Liquefaction Engineering 80% complete. You're not stopping. If anything, you're accelerating your growth, I would think, at this point.
Jim, we announced just a couple of months ago a $20 billion growth capital investment plan over the next 6 years, project by project. It's not an aspirational thing. We named the projects, said where they're going to be, what they're going to be, when they're going to start, when they're going to finish. We have a very good track record with that. We announced that our compound annual growth rate is going to be 7 to 9% over later in the period, and 5 to 6% in the beginning of the period. And as you mentioned earlier, an 8%, our expectation is an 8% a year annual dividend growth rate, part of which is going to come from the benefits of the MLP we created.
Now, you also have one of the fastest growing areas of the country because of your low power costs, and you've got the data centers everyone always talks about, but you're probably one of the few companies actually making money off of data centers, aren't you?
We're over half of the internet traffic in the United States flows through our service territories in Virginia. And it's largely because we have very reliable electric service, and we're well below the national regional averages for electric rates for residential customers, industrial customers, and commercial customers. So that's and there's a very large tech community in Virginia. So all those things together combine to bring a lot of the data centers here.
Tom, yesterday I was talking with David Faber, my partner in Squawk on the Street. He said there's a war on coal in this country. I said, well, you know, I mean, they're trying to. He says, no, it's a war. You've got 9 coal plants. What? You're protected for a certain time. Could the government come out tomorrow and say, Tom Farrell, you know what? We're done with coal and we want them shuttered. What's the rules here?
Well, I wouldn't adopt the statement of a war on coal for my part. But there have been a lot of new regulations from the Environmental Protection Agency in particular that affect coal. We have the climate rule is coming, the carbon rule is going to be out in the next several months, sometime over the course of the summer. And that's going to tell the tale a lot on what happens to coal over the next 15 years. We have shut down coal plants in Virginia, and we have a significant danger of more shutdowns depending upon how the carbon rule comes out. I think the EPA, they've listened very carefully to the concerns of our industry on reliability. We hope to see some modifications to the rule that will allow us to keep some of the plants operating longer and some of them for a significant amount of time. But not all of them will survive.
Okay, and Cove Point liquefaction, your export. Every time I talk, I always want an update because I know these plants are notoriously difficult to build. It seems like yours is right on time and on schedule.
Ours is on time and on budget.
Wow. I mean, you just deliver. And I know, look, one day, you're absolutely right. What I want people to do, Tom, is hear what you said about after rate hike. Right now, they're petrified. After, they're going to be thrilled. Tom Farrell, Chairman, President, and CEO of Dominion Resources. Great to see you, sir.
It's been great to be with you, Jim. Thanks for having me.
#1 utility company in America. Okay, so this is the one to watch when they raise rates. You heard Tom. It's been the greatest growth utility of our time. It's the one you want to be in. Mad Money's back there to the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.